Hi, MSL here. Today, let's talk about the mortgage interest deduction. If you have a mortgage or you have plans of getting a mortgage, then our tax laws have a special incentive for you. So listen on and find out about the details of the mortgage interest deduction. Before we go into the details, what is a mortgage in the first place? At a very basic level, a mortgage is a borrowing which is taken for the purpose of constructing property or acquiring property. So if you have a mortgage, you typically pay interest on that borrowing, on that mortgage. The law allows you to deduct that interest in determining your income tax payable. This will have the effect of reducing your tax payable. So listen on for the details. What are the conditions you have to meet to be eligible for the mortgage interest deduction? The first and the most interesting thing is you are only entitled to this mortgage interest deduction for just one residential premises during your entire lifetime. So during your entire stay on this earth, the tax law allows you to choose one property, one residential property, and apply the mortgage interest deduction on. So the advice is choose carefully. The next thing is the property should be residential premises acquired in your name. The property should be situated here in Ghana, so you cannot apply this to property outside Ghana. Like I already said, it's only applicable to a single residential premises during your entire lifetime, so you cannot switch to another second or third or fourth property. The loan you've gone for, the mortgage you've gone for, should be employed or used in the construction or acquisition of that single property we are talking about. Ideally, the loan should be denominated in Ghana cedis. If it's a dollar-denominated loan or any foreign-denominated mortgage, the interbank rate would be used to convert the relevant amounts to Ghana cedis for the purpose of determining your mortgage interest deduction. Your loan should have been secured from a recognized financial institution, typically, or sometimes if an employer is able to give you such schemes, or you have a registered lender who is recognized by law, then such borrowings would also qualify. You should be able to prove that you pay your interest on a periodic basis to qualify for the deduction. So there should be a mortgage interest statement, for example, a mortgage statement, which would show your periodic payments. If you are a self-employed person, you are not left out. You can also take the deduction. So it applies to both employed and self-employed persons. You are both able to use a mortgage interest deduction to reduce your income tax payable. Your deductions you would have for each year would be restricted to the interest that actually been paid for that particular year. If for whatever reason property is used for commercial purposes, then the mortgage interest deduction would be restricted to the residential portion of that property. If you happen to dispose of the property before the end of the mortgage period, then the deduction will cease. Remember, I said when we started that you are entitled to this benefit for just one residential premises during your entire lifetime. If you happen to sell the property, then it means you've sold your only property that could have given you that incentive, and you have lost your right to the mortgage interest deduction. So what are the procedures to go through if you want to apply for this? If you are an employee, then you must furnish the relevant documents to your employer, who will typically forward your application to the Commissioner General of the Ghana Revenue Authority for the mortgage interest deduction. If you are self-employed, typically you would also have to apply, and then you can deduct this when you are determining your chargeable income for the year and filing your tax returns for the year. Who are those who are not entitled to the mortgage interest deduction? A non-resident individual for tax purposes would not be entitled to the mortgage interest deduction. Second thing that could disqualify you is if you go for the mortgage from a financial institution that is not recognized, or you borrow from a foreign financial institution, any bank outside Ghana. So if your mortgage is with a non-resident bank, the bank is not in Ghana, then you are also disqualified. If after your initial property, you go for mortgage on another property, like I've said, that second property would not qualify. It has to be your only place of residence, your sole primary property, that gets this mortgage interest deduction. The interesting thing to round up with is if the property is a jointly owned property, then your name should be on the mortgage deed for you to qualify for the deduction for your respective share of the mortgage interest. So jointly owned property is fine, just that your name should be on the mortgage deed. We should find your name on the documentation for you to be able to get your respective share of the mortgage interest deduction. If it's a residential property initially, and you decide for whatever reason to convert the whole property from residential to commercial, where there is no longer any residential portion, then from the point it becomes a full commercial property onwards, you have lost the remaining mortgage interest deduction and the right to deduct interest on your mortgage. If the property is sold, like I mentioned earlier, then the new owner does not qualify for the unrelieved part of the interest. So you dispose of the property on which the mortgage is owed and someone else buys the property. They do not get to continue from where you left off. So that's about it for the mortgage interest deduction. It is meant to reduce your income tax payable if you have a mortgage. So we use your interest, not the principal. The interest component of your mortgage payment would reduce your tax payable, whether you are an employment or business, self-employed or employed. If you found this insightful, do share this with anyone in your network and subscribe to all our different social media platforms. Until the next one, it's bye for now.